Global Marketing Strategy, Mark 70018. Global Pricing Strategies, Lecture 7, Part 1. Starbucks pricing around the world. A question to consider. What influences different pricing strategies for the same product around the world? Link to Starbucks pricing strategy video. Factors to consider in international pricing decisions. This flowchart diagram illustrates how the pricing strategies are influenced by internal factors, firm-level factor, and product factors, as well as external factors including environmental factors and market factors. Pricing strategies will influence the term of business, terms of sale, and terms of payments with its host country customers. Pricing a new product. Skimming pricing. High price, pricing above existing identical competitors. Market pricing, pricing at the same price as other identical competitors. Penetration pricing, low price, undermining existing prices to gain attention and market share. International pricing strategy, skimming. High price is charged to skim the top end of the market in a short time. Segments willing to pay high price. Firm trades off low market share against high margins. Example, Apple iWatch or a competitor's digital watch. International pricing strategies, market pricing. Prices based on prices of similar products currently in the marketplace. Exporter has the confidence. International pricing strategies, market pricing. Prices based on prices of similar products currently in the marketplace. Exporter has the confidence the PLC is long enough to warrant entry. Companies prepared to accept world market price. Net price must create a reasonable contribution margin for firm to proceed. Example, Coca-Cola and Pepsi. International pricing strategies, penetration pricing. Stimulate market growth and capture market share by deliberately offering products at low prices. Reduction in unit costs through economies of scale and experience curve effects. Undercut the competition but cannot go too low since product may not be deemed credible. Example, Lay's and Pringles potato chips. International pricing strategies, product line pricing. Prices across products may indicate an economy version, a standard version, and a top-of-the-range version. One product may protect against competitors or help to gain market share from existing competitors. Products with less competition may be priced higher to subsidize other parts of the product line. Example, Procter & Gamble, P&G, Crest product line. Pricing across countries, standardization or differentiation. Companies need to determine how to coordinate prices between countries. Two opposing forces. Achieve similar positioning in different markets via standardized pricing. Maximize profitability by adapting pricing to different market conditions. Pricing across countries, price standardization. A price is set as the product leaves the factory. A world fixed price is set. Fixed prices apply to all markets after currency exchange and regulations are taken into account. Low risk strategy, no attempt made to maximize profits. Appropriate if firm sells to very large customers who have companies in several countries. Pricing across countries, standardization or differentiation. This diagram illustrates how consumer prices, retail prices, price positioning, terms and conditions, product line pricing, and special offers are impacted by price differentiation and price standardization. International pricing taxonomy. Solberg suggested that firms' international strategic behavior is shaped by a degree of globalism of the firm's industry, a measure of the market-related factors. 2. A firm's degree of preparedness for internationalization, a measure of the firm's ability to respond to market-related factors. A pricing taxonomy model along the same dimensions. We discussed this in one of our earlier lectures in terms of steered home through to strengthen global position. This model proposes an international pricing taxonomy along the same dimensions. International pricing taxonomy prototype 1. Local price follower. This matrix diagram compares industry globalism on the horizontal axis with companies' preparedness for internationalization on the vertical axis. Manufacturer has limited international experience. The firm's agent or distributor serves as informant for firm. Export intermediate may mislead exporter, leading to further transaction costs and internationalization. Limited knowledge means exporter calculates prices crudely, based on cost and local intermediary. International Pricing Taxonomy Prototype 2, Global Price Follower. This matrix diagram compares industry globalism on horizontal axis with companies' preparedness for internationalization on the vertical axis. Limited preparedness for internationalization, more motivated in expanding their international market involvement, they are pushed by the global market. Firms charge a standardized price, since interconnected international markets have more or less same price level. Limited bargaining power and adopt price set by global market leaders. International Pricing Taxonomy Prototype 3, Multi-Local. International Pricing Taxonomy Prototype 4, Global Price Leader. This matrix diagram compares industry globalism on horizontal axis with companies' preparedness for internationalization on the vertical axis. Strong position in key world markets, operate through hierarchical entry modes or in joint ventures or in alliances in major markets. Competition is low, verging on oligopolistic situation. Maintain relatively high price levels in markets, but not as effective as the multi-local counterparts. Are not as effective as multi-local price setters in erecting local entry barriers. Entries such as brand leadership and relationships with local distributors and local understanding. Foreign currency transactions. What currency should the price be quoted in? Domestic or local? If exporter quotes in own domestic currency, risk associated with exchange rate fluctuations are borne by customer. Quoting prices in the foreign currency bears exchange rate risk.